Welcome back to this special chat with Raamdeo Agrawal of Motilal Oswal. We've been speaking about their 28th Wealth Creation Study report, as well as about, the new boom that we are seeing in equity markets. Okay, Raamdeo, you were speaking about, you're written about this hockey stick move in some stocks.
Yes.
Can you tell us, how do we pick the next stock? You told us about all the Astrals and the JB Chems. How do you pick the next hockey stick stock?
Yeah, so that hard work has to be done by the investor himself. Okay, I have given the framework. See, we read the book, the hockey stick strategy, strategy beyond hockey stick. So that's the book. I think fantastic book on strategy, very practical. And this is a way, if you read the book and figure out. So they have talked about concept of economic profit. The first thing is economic profit. And as a chartered accountant, we have done accounting, and there we talked about always net EPS and net profit. But very simple thing is that when you do net profit as per accounts, you don't charge for the equity. You charge for debt, you charge for everything.
You don't adjust for cost of equity.
Cost of equity. So if you just take a simple, instead of going through some alpha beta, if you just take the cost of equity as 10%, because last 10, 12 years return has been about 10%. So you take 10% for all the companies. You arrive at, so we have given an example of a company like, I think IOC and Nestle or something like that. So one company uses 1 lakh crore of equity and profit is say 5,000-6,000 crores. So actually there's economic loss. Whereas other company makes say 2,000 crores profit or 2,500 crore profit, but uses hardly 2,500 crores. So economic capital charge is just about 250 crores at the rate of 15%. So his economic profit is 2,250 crores, whereas the other guy, though looks giant, is actually economic loss. And that's why market has punished also. Market cap of the smaller company is much bigger than market cap of the large giant company. So that, to some extent, see in market you cannot explain all the difference in valuation, but yes, this explains what market values. So we are not practicing it, but market is practicing it somewhere.
No, but if by your logic of economic profit, you have given us a list. I'm trying to find that in your list. The list of companies with highest economic profit and not accounting profit also includes SBI, ONGC.
I think
so you think their day has come?
TCS is the largest. It's about 30,000 plus crores of economic profit. Then, so we have given entire Nifty, the entire list of where is really they stand in economic profit. What happens is some of the companies like say Reliance doesn't show as an economic profit company, but they are amalgam of 3-4 large businesses. So they are making tons of money, economic profit in their original business, but they are probably investing in Jio and retail and whole lot of other things. So that's why the fused company looks to be like not making economic profit.
But the petrochemical or the...
so it's a sum of profits kind of situation. So one has to analyze, but basically when you are looking at single stream companies, simple companies, their economic profit as a concept is worth pursuing. And what this study is about, the book is about, is that you must measure the success of the companies in terms of economic profits, and economic profit is distributed in a power curve situation. So it goes like this. So the 80% of the economic profit is in the top quintile, so 20% of the companies, and 80% of losses are also in the bottom quintile. So you have, and then middle 300 companies, they are all gone nowhere types.
That's so you have to look at companies migrating from the...
so what he's saying, the strategy is you find a company at the middle and what it takes to go from middle to the top quintile. That journey of hockey stick. When they do hockey stick earnings growth, market gives them, with the re-rating, super hockey stick returns. So economic profit, the measurement is economic profit, and the way to go about is, there are 3 steps he's saying: endowment, trend, and moves. So what is endowment? So any company start its journey with some kind of endowment. So they have competitive advantage, they have brand, they have distribution, they have people, they have businesses, relationships. Those are all starting point.
The endowment of the company.
But there is no tailwind in the business. So the company will stay there only. There cannot be better person than me to talk about the benefit of trend. I'm telling you, in capital markets for last 10, 12 years, we've done so much of action as a corporate action. Whatever is possible, we have turned the mountain, I'm telling you. And yet nothing much happens. We're doing well.
You saw just
between 2008. See,
the decade of 2011.
So we have a lost decade, despite massive action when I look back. But nothing happens because there is no trend. Now from 2020, the trend has started. We are literally 10x in 3 years in terms of profits.
Absolutely.
So that power of trend is massive. Every business is different.
The trend is whom now? You just spoke about government is into capex. If they spend the money and private capex comes. So do we look for capex companies?
You have trend and trend all over. Like there are multiple trends. Like you play Scrabble. Your opponent cannot see what trend you are seeing in the building. It's like that. There are so many trends. The whole universe is full of trends. Business is full of trends. So something is happening in terms of IT, something is happening in AI, something is happening in real estate demand, something is happening in the cost structure of cement companies, something is happening in pricing of cement companies. So you have to find that trend which is on which you can bet. And trends are short-term, long-term, cyclical, secular. All sorts of things are there about a trend. Just think about it. You can keep thinking about trends. But without positive trend, so it's like a skeleton where a person is running. On top of it, you get a skeleton. And then you go at the speed of he himself plus a skeleton. And when the company's trend is headwinded, you are as if you are trying to come down and the skeleton is going up.
Yes. So, but still, if you would pick up the top, I know there are many trends that you can pick up. What would be the top, say, 2 or 3 trends that are staring at you in the face?
So the newer ones are like, say, rise of capital market, like rise of retail.
Okay, so capital market intermediaries.
That's very close to me. So I am saying that. Second is the build up in the savings boom in India from 10, 12 trillion dollars in the last 25 to 125 trillion dollars of savings.
So that would be mutual funds or banks?
Now this is where one has to figure out. Banks, of course, will be beneficiary because bank is a scale economics and you need. So they are going to be very large beneficiaries. Second, of course, all the asset management companies, broking companies, your CDSL, NSEs, BSEs, whatever comes on the advisors, all the wealth will be so much. You need all the global wealth managers will be sitting here, I'm telling you, in next 4-5 years. They'll all open shops.
Yeah, so certainly financial sector, capital markets.
So that's one part of it. The second, in real economy, your every day you keep coming out with a newer, now capex boom.
Capex boom.
So government-led capex boom, and now private sector is just knocking the door. So the capex boom will happen. So all kinds of
real estate.
Real estate is another one which has almost 1.5 decades of kind of absence.
I know,
from 2008 to 2023, and now I think they will have very
sleeping
prolonged.
Giant wakes up.
If they play their cards well. See, they also need. That's where the corporate move comes. So there is an endowment. They have everything. They have brand. They have opportunity. Everything. And trend also they have. Then after that, you have to play your cards well. So the managements have to remain very disciplined because it's very easy to be taken away by some crazy greed, over leverage.
Over leverage or over price or over supply.
Over leverage, doing some nonsensical projects. Not doing something what the market wants. So being ahead of the market, producing right quantity, right product, and giving to the market. I think it's not a 5-10 years. It is multi-decade trend for them. Okay. It's a very large industry.
You have whetted our appetite to read the report in full. I have read it. I have read every word of it. But I would, very strongly recommend that those who are serious investors should, go ahead or of course, you can fall back on mutual funds. You can fall back on the Focus 35 or the Focus 45 as you please. Thank you very much, Raamdeo Agrawal, for discussing your report and for joining us on what's a really big day for the markets. I think what stays with me is that the biggest of all bull runs is probably
grand finale is still ahead.
Grand finale is still ahead. Those are the words that we should carry from this interview.